Okay, guys, it is Bruce back at it. This is for Greyhawk and a few others that have asked me. So I'm back doing Roundhill, not only doing it, but I think doing it better. By the time you see everything I'm now going to include, I don't see how you won't think that it's improved. So bigger, better, Roundhill analysis. Okay. Certainly I can get in, do a few other funds, but I got to keep up on my Patreon. But I sort of owe you guys some dividend income analysis. I still want to do some on just the commodities, whereas we really just have two really commodity oriented funds in here, but that's beside the point. Let's jump in here. All right, so I'm going to do three levels of discussion. I'm going to do point by point, so all 23 ETFs from Roundhill, weekly payers now, and I'll go through them at the detail level. Then I will do the summary sheet where I've added some additional graphics, and then an executive summary of what looks good. And I'll make some of those comments along the way. So let's take NVIDIA. All right. And there's a few new looks. Most of this you guys will instantly recognize. If you're new, I'll attempt to give you a little bit of detail. So I take every week and I track. So on Friday, almost always Fridays, unless there's a holiday impacting it. So this thing will pay today when the market's open. We're a couple hours away from the market open today on Tuesday, 8/4. So the current close price, normally I make this stop at 731, but this is actually using 8.3. So just be aware of that. I'll go back and I'll hard code it to 8, to 731. And so you see over here the change in red or green. I've also posted the recent, as of 731, the 30-day IV on the underlying, which dictates they are buying the underlying and then they're writing options. So the volatility on that drives the premium on the options. All right, and remember that Roundhill is always leveraged, anywhere from 120 to 135%. So a fund that is exploding like AMD was doing for a while, when you look at AMDW, it's like a rocket up, but all things that go up eventually comes down, as many of you have experienced in the collapse of um, SanDisk and AMD and a few other super high. I mean, SanDisk was up 4,400%, but I said, don't buy it right now. Sure, it could go up another 5, 8, 10, 12%, but it's also going to have a 50% or more correction. And that has been played out. So just be aware of it. I don't think we're done with the AI super cycle, but I think the high flyers, they're really, memory, high bandwidth memory, um, semis, the chips themselves, the high end AI chips, those have all been in mass demand. And I'll show you on some of the earnings on, Amazon, and I haven't done my Apple, but I've got another I got Palantir in there. I've got Apple. Anyway, I've got two or three. I'll show you those along the way because you need to be aware of what's going on. And I think you're really going to like my summaries and executive summaries. So, no big deal here. 33 cents. How does that compare? Well, it's greater than the week before, less than this week. You see a lot of 36, 36, 38, 38, 48. So, NVIDIA is one of the better funds. It's got a decent IV. It's not the old days of 80, 90%. What I track over here is every time I add a new row, it pushes this down. So right now, over the last 6 NAVs, so if you add all 6 of these, you'll see that the NAV, or the price of NVDW, is down $2.68 over the last NAV periods, right? Which is once a week. It has a NAV period to record. So 6 weeks, the fund is down 1, 2, 3, 4, 5, 6. It was 34.23, right? But here's where it started this 6 week run. So that's why it's down 2.68, right? You go from this is week 1, week 2, week 3, week 4, week 5, and week 6. Now, these are never negative. So if it pays money, they're positive. So what do we get? We get $2.68 in 6 weeks that we lost based on if we bought it right here and held it for 6 weeks. We got paid a dollar. So we're only down a negative 2.75 total return, right? But it's, hey, what have you done for me lately? That's it. Well, if you go back just one period, so if you start at this one and then take 6 weeks up, you see that it had slight positive. So think of this as the last 6 weeks, as the last 5 weeks, as the last 4 weeks, kind of a scenario. Um, it's not full independent 6 week periods. It just adds one more to be counted, right? This was only counting 36. Now this one, right? So that's why it was positive, and overall still down a dollar, 62, but it hadn't dropped as far. Now by adding it, right? So you see how this flow goes. Eventually, these will help you see what each 6 week period is doing. All right, so let's move through these. Let's now look at Tesla. And by the way, some of these funds are already past their 365 days. So in my summary, I don't want to go more than a year. I'm keeping them at what have they done in the last year of sort of my roll up. And you'll notice that. Now, there are some funds that haven't been there yet a year. They're 270 days, 280 days. Well, then we just extrapolate the percentage dividend and annualize it, and the same thing with the NAV. But when it's past, like, I think we're up to 70 weeks in some of these funds. So I pull them back to 52 weeks. And Tesla's in that case. So now Tesla is an interesting one. I'm very bullish long term on Tesla. I don't see how anybody can't be. I mean, Elon Musk is brilliant. His ability to make products are just unbelievable. He's not the greatest at forecasting, right? Because if you're an engineer sleeping on the floor working 20 hours a day and you're worried about Optimus, the robot, and sourcing and building your own chips and building data centers and automating everything, I mean, the guy's got his hands in a million things. And yet he's a brilliant, visionary engineer and hires great people. He's a lousy business person in one aspect. He can see the future, but he can't. Oh, Optimus is, we're going to be positive revenue in 6 months. Well, it may be 18 months, it may be 36 months. But I tell you, he will make you money if you're in it long enough. And and I do believe that robotaxi, they're rolling it out. Sure, it's slow and it's way late from what he talked about. But you wait till this Optimus rolls out. That by far will be much, much, much bigger than the robo taxis. And he has to get to scale. His ability to make that hand is probably what differentiates Tesla's robots from Boston Scientific, from the Chinese. Chinese are ahead in some way with robots, but they don't have the hand dexterity that ultimately sort of the personal household robot. AI brain will be fantastic, but the dexterity, right? And sourcing the parts becomes an issue, the raw materials and everything. So he's looking to do a lot of unique things there. And he has to make it at scale, right? He's going to make his own high-end chips. So there's a lot to be said for it. But it's the old saying, look, you could go broke betting on Tesla short term. But I think even over a year, over 2 years, over 3 years, first of all, I think, the his other big rocket company, SpaceX, they'll merge, and the two of them will be a single company probably in 6 to 18 months, and you'll have all that benefit of the AI, of the space, and that one's got to grow. The valuation was excessive, right? And a lot of people are seeing that come back down to earth. But I think this is a good fund long term. Now, again, you can go broke betting everything on it. I own a small sliver of it. And when I see it optimized on a position, I'll talk about that later. I wouldn't run out and do anything. At 4.8 cents is down from 11 cents, down from 24. He got beat up. I mean, this is ugly because he missed his earnings. But again, that's Elon, right? His brilliance is also a weak spot at times. All right, let's roll through. I mean, over 1 year, he's paid 28.64, but his NAV has lost 36. So you've lost $8 on your money, right, relative to what it's paid you. So that's negative. You want to avoid that. But what do we have here? We have leverage. When these things turn, you want to be in them, and I'll talk more about that. Now, here's somebody that's getting it done. Apple's getting it done. I mean, if you take 6 weeks, 6 weeks, 2 weeks ago was this level, 6 weeks last week was 15. And then when we just added this payment the last 6 weeks. So when you're green and green, it doesn't get any better than that. Your NAV is going up and you're getting paid, which is always a positive number. Add those up. Now, certainly it's showing here, this is a Monday close, not a great payment, but a lot better than 10 cents and 9 cents and 17 cents. So again, not the most consistent payer. I'll talk about some of that in my executive summary. The IV hasn't been that great, but overall, I mean, Apple's held in there, right? They really have. Um, it's certainly technology that people are still buying. And their Azure is doing very, very well, right? That, unlike, or sorry, I'm confusing now. Azure is, oh geez, I can't even get my head to think through what I'm trying. Microsoft. So Microsoft is in the Amazon space where Amazon has AWS. Then most people know it as retail. Apple, you buy all their products. I was thinking of Microsoft. They've got all the Windows suite, but where all their money is in Azure. And I'm just mixing up Microsoft and Apple, but still very positive here for Apple. And these people are putting money into AI. You have to. We'll go into more. So over the last year, it's still a positive, right? So you got a red number here, which you expect. But look at that, the difference in Apple. That's how you get a winner. You simply get more positive payments than you get negatives, right? And I'm calculating this. I'll probably roll. Well, no, this is one that hasn't 228. We should be counting this over the last year. So we should be using like 214 here. And I think it's held up pretty well. This number will drop. 11, 12 versus 4. Because, looking at it from 70 weeks instead of 52 weeks, it's like, you want everything to be close to a year. All right, so coin, ugly, right? I mean, everybody knows, but between MSTW for MSTR and COIW for the coin, I do believe there will be a turn. October, maybe as late as December. You had a situation with crypto where crypto was following the NASDAQ. And then when gold started ripping, everybody else said, well, then, here's another alternative money and value, and let's get crypto. So crypto did the worst of all things. It stopped following the NASDAQ up and started declining and didn't follow gold up. I mean, honestly, all that early, the last few years, has kind of hurt the metals. And I'm not worried about the metals anymore because the central banks figured out they need it. Now the fundamentals are coming in into play. I think we've seen the bottom in silver. One of my cycle guys had August 3rd as the bottom in silver. Intraday, right? Didn't have to be the close because we closed up higher. And then my other cycle, which I sent out to some of you Patreon guys in my top tier and in my options tier, they had around the 20th, give or take a week or so. So I think the metals have really bottomed. I know people were calling for 3,800 gold, 3,500 gold. I'm not sure. 4,000's kind of been the bottom. We've gone into 39s, but I mean, could it get slammed down for a few days or a week? Sure. But it's the same buying opportunity. I've already loaded up with some 2028 options on AGQ, 2 weeks ago. So I'm not afraid to be in that position because when the metals start to run, the fundamentals are through the roof, right? But you've got to actually see it bottom and move up to really make the money. But who wants to wait for gold to be 5,000? Right? Knowing that it's going to 7,000. That's okay, but I'd rather own it at 4,000 knowing that it's going to 7,000. All right. So coin again, ugly right now, but there will be a turning. Bitcoin more, maybe MicroStrategy, I don't know anything related to Bitcoin. And when it does turn, I mean, look at MSTW. It's down 97%, the NAV on the fund. I imagine this one's pretty ugly too. Let's go back and look at the full time on Coinbase. This isn't even giving it the 1 year. This is giving it the, you know, year and 3 months or something. $29 you've been paid, but you've lost $41. Now remember, these things launched, at 37. It's 11. That's brutal. Just brutal. I mean, it does pay. Now, Palantir, I'm going to show you the earnings here. Palantir had a fantastic quarter. The problem with Palantir, and I think you guys understand it, is when these things rip like Palantir did, then it's ugly for the downfall in one of these funds. But if you're going to trade it when it's up near the all time highs and breaking out and everybody's bullish, sell it, put an order to buy back in 20, 25% lower, maybe 30% lower on these income funds that have leverage, and you'll win in the game. Some of you I know are trading, these things on a weekly basis or something, which is a little crazy, but let me pull up TradingView here and pull up Palantir. So I mean this if it doesn't get any more classic than this, right? This is simply from an Elliott wave standpoint, one big massive wave. I mean, if you got in on this thing back in 2024, I was touting the hell out of it all through this period of time. Palantir is a winner. Well, when it just goes from, $20 over here back in, even here, $20 in May of 24 to September. So you got about 13 months and you had a 10 bagger, $20 to $200. So anywhere in this kind of range, when you see this level of extension, sell your fund. Even if you sold it at 154 and then you come over here and you buy it at 120, you just took $30 out of it. Now, can I tell you exactly without loading my Elliott wave analysis? Is there a little more down? There could be down here to 80. I have to really look at the wave and analyze the Elliott wave percentages. But guess what? It's not done. It just had a fantastic quarter. I mean, a really good quarter. And this technology is used, the military uses the hell out of it. Commercial use the hell out of it. But so do hospitals, so do manufacturing. I mean, it is the high-end software package to put everything together. All right, so I'll leave that and get back to where I was. Well, it's easier said than done. Okay, it's on. Didn't lose my place. All right, so that's Palantir. I like Palantir, and you'll see in my executive summary. Now, nothing to write home about because it's been going down, right? But you have to understand what you own and how this leverage plays. And the same thing here. We want to move this back to the 1 year range, which would be right here, like 372, so that my totals are. I was doing and using the column anyhow, but I might as well not even count these higher than just the 372 mark to keep it. Yeah. So over the last year, because you've got a propensity of a big down piece time wise, if you go the full time since Palantir has been with PLTW, then you got a slight winner. But this is a negative, right? Over 52 weeks. But I also like it as it's starting to get to these levels. Now, Amazon is interesting. I do like Amazon. Their earnings were fantastic. I'll show you that. Oh, actually, that's a good time to jump to these earnings. And let's talk about Palantir and let's talk about Amazon. Okay, I was talking about Palantir. For somebody that wants this, send me an email and I can send you this. I know it's in the video. I may just post these out there for clips and for everybody, but I've done three. I've done Palantir. So look at this, right? So they beat earnings. I've got actuals on the right, estimates on the left. So they beat earnings by 7%, or sorry, they beat revenue by 7%. They beat their earnings per share by 17%. They made 41 cents. They said they would estimate 35. So this revenue is in billions. So 1.9 billion for Q2 26 and 1.6. So quarter over quarter, they had an 18% gain. Year over year, Q2 25 to Q2 26, 90% gain. And 2 years is, 69% continuous annual gain over a 2 year period. It's fantastic. So commercial revenue, 764 versus 595. Everything's green. The only thing here is on the gap, right? Gap accounting, the gross, minus 210 quarter over quarter basis points. I mean, you don't see many earnings where everything is green. So this has just had a fantastic quarter. They are a cash machine when they get going. Now, the valuation just simply got overstretched. It was always high because they're a fantastic software company. It's easier to have high margins in software than it is in hardware, right? Because you get into a commodity shortage, you can't get the raw materials, aka silver, you know, um, rare earths, etc. Right. That's why silver has that double edge of being, a rare metal or a metal that's in greater demand than there is supply, because there are no primary silver only mines. They don't exist. It's a byproduct of getting gold or zinc or lead or a few other metals. And oh yeah, so maybe we get our revenue up 40 or 50% of the total revenue, but you'll never see a silver producer it's 80 or 90%. Now there's an interesting little silver miner I'll talk about that's buying up the small amount of silver that these big gold miners pull out and saying, I want royalty. I'll pay you. You give it to me and I'll pay you a royalty stream. So then that little royalty stream silver miner owns nothing but small silver from a whole bunch of big miners. And that looks like interesting. I'm going to do a video on that. I've talked about it once before, but I'll talk about the company more and why I like it. Interesting concept. All right, so positive here, right? On this kind of stuff. I sum it up, got my logo. So that's that. So we just moved to Amazon, right? Look at Amazon. Same thing, 200 revenue, they beat 196. Look at this EPS. The analysts were estimating $1.82. They made 575. You don't see that often. There were some factors that led into it, but I'll never get through this thing if I go into all this detail. But I wanted to show you guys I do track this, I do understand this stuff. Okay. And here's your Microsoft, right? The only one I haven't done is Apple. So Microsoft did well. 474, they beat their 4. Oh, I think this is the other way. I typed these wrong, guys, because this was positive. So the 474 goes over here, and the 424 goes over here. Easy to make a mistake when you do as much as I've done, but wait till you see what I've done in the summary, in the executive summary. I think it's just awesome. All right, free cash flow. The thing here with Microsoft, remember I was telling you they have Azure. So they compete with Amazon and with Google and with Oracle, cloud services. So they're the number two. Amazon's number one in cloud source services, and Azure, the Microsoft name for their cloud services, is number two. But fantastic, right? And this RPO, if you want to know, so RPO stands for remaining performance obligation. It means the total value of future revenue that Microsoft has contracted under signed customer agreements, guys, not makeup stuff, but is not yet recognized on its income statement. So when you trend like this is all has to do with cloud and building out and so forth. So look at the growth, 269, 368, 627. Right. Now look at their year. See, this is a fiscal year, guys. Saying, hey, we're not Q4 26. Well, it is. It's their year ending this last quarter, right? What everybody else or most people's Q2 ending in June is really Microsoft's end of the year, Q4. So again, it's the only one in my earnings, but I'm sure there's some others. But look at this, 90.01 billion, right? If I put the billion in here, then my numbers get messed up in calculating. So I just make a note of it. 90.01 billion and 82.88, right? So they're getting it done. No question about that. All right, let's keep moving through. Mostly green. Free cash flow, it looks like here, fell in some of the year over year kinds of things. Look at this. They had a Q4 25.6. I don't know the details behind that. I don't know if they had, capital expenses. I don't know, but I explained to you what RPO is because that's kind of unique. Operating net and gross margins look good. All right. So that's kind of it for my three earners. Let's stick on this. So here's your Amazon. I'm going to roll through these a little faster. Here's an interesting, because in my summary, so when you have a volatile market where it's not happening right now, but when the market is selling off, Berkshire Hathaway, right? This is based on BRKB, the underlying, is a pretty stable fund. You're not going to get paid but look at this IV. It's a stable, when the market is crashing and you want some income, right? This, look at this. It doesn't pay a lot, but even when the NAV is down, which it doesn't go down much, right? It's still positive. So three consecutive periods of positive, with this one really being positive where the NAV went up and you were paid money, which is what you always want to look for. So this one is a little over a year. If I went back, I'd put in 515, I think, for this date. And it doesn't change a lot, guys. It's still $9 to $7, right? So steady, steady. Now, I've argued with people in the past about Hood. And, I said, look, it's at the end of the day, it's a stockbroker. Oh, no, you don't understand. It's crypto and it's this and it's tokenization. And yeah, I understand. But I also understand when things get too hyped. When Carvana, it's all it does is sell used cars. Sorry. We've had cars for 100 years now, right? You got to have something bigger and better than that. And we go through cycles of when people buy cars and how long they last and what kind of cars they buy. And so it's the same thing with brokerages. Don't get me wrong, Hood is still a go to brokerage by a whole group of younger people. I say younger because I'm talking about somebody that's old, me. I remember when E-Trade and Ameritrade and, some other names out there were the big new trend. I get it, right? But they don't last forever. And Hood will have a resurgence. I get it. But boy, you want to talk about another chart? Go look at Hood. That thing was the biggest payer for quite a while. It's kind of the like AMD's been, right? Hood was just kicking ass and taking names. 40, 50, 70, $80 in the NAV, paying out big payments. But it's no different than my silver. We ran to 121. I was telling people to buy silver when it was in the 30s in the silver miner. And these things just run. And when they run crazy, guess what? They're going to stop running. They're going to come back down to earth. But if you think silver is done and isn't going to be 200, then you're not really seeing it like it really is. So I appreciate you, those that have stuck with me on the Patreon side. And for you people that left, shame on you. You're never going to get real wealth when you give up on something that fundamentally has every reason in the world. Fiat is fake money. We got fake news. Now we got fake money. We've had fake money for 100 years. It's not backed by anything. It's the full faith of the government. How much do you trust the government? Doesn't matter what side of the party you're on, whether you like communist or you like somebody else. And I've been in gold for a long time. I've made a lot of money in it. And you know what? Patience at times is brutal. When you're seeing some of these stocks, why do you think I was talking about the AI super cycle? It's real. I just don't trust it the way I trust precious metals and real money and the commodity cycle. The commodity cycle will outperform this AI cycle. You're going to have periods, though, when SanDisk is up 4,000%, right? But we're going to look back at $20 silver when it's 350 and say, oh man, I wish I'd have bought more of that. It's a classic line in some of these little miners that people don't have the get right, set tight patience. You got to hold these things multiple years sometimes. That's how real wealth is made. Yeah, think about the dot-com era, right? I'm on my rant. So you had all the fake dot-coms, but if you just held a Microsoft and it got its ass kicked, nobody knew, or sorry, Amazon, you didn't know that Amazon was going to be a giant and massively successful. But you got to buy those things and have confidence and faith and understand it. By the way, I'm working on something that I think for my Patreons, I'll probably give it away to my top tier. And I think this piece is becoming literally, I could make a book and sell the book. What I'm doing is I'm analyzing fear and greed and how markets have had cycles, boom bust cycles for hundreds of years. And I'm doing it from the psychology side. How do you buy something? How do you hold something? What do most people do? Well, most people leave the gold and silver miners because they can't take 6 months of down. They can take 5 months of, 300, 400, 500% gains, but they can't take, a 50 or 60% downturn. That's what you have to take sometimes, guys. Otherwise, just go buy an index funds and don't spend any time in the market. You're never going to get rich. You can't even keep up with inflation, right? You think the CPI and colas are going to take care of you? They're not. I figure our money over the next 5 years is going to go down another 75%. I'm hoping to get a 300 or 400% in gold and silver during that time, probably more in silver. That's just the truth. That's why you own those assets. It's like an insurance. but no insurance policy on your house. You just got through another year. They kept the money, and if you had a flood or a fire, you wouldn't lose your home. But you didn't make any money on the insurance. Well, gold and silver and precious metals, you make money on that. Sure, you can have 3 years of having it go down. You can have a decade of it going down if you're in the wrong decade. I mean, we've been waiting for this commodity super cycle, and it's far from being done. It could rip massively higher in the next 24 months. All right, so let's move through these. I'm getting long in the tooth. Meta, Meta had a couple of good quarters. Meta's spending, it's another hyperscaler. These guys are spending money on AI. They're afraid to be left out. All right, let's get through these. Netflix. I like Netflix where it is. You know, People are watching their money. The average person isn't making enough money to get by in the first world countries. So, and somebody that's making a lot of money and they come home and they chillax, right? Chill and relax. What do you really want to do? Probably want to just turn on Netflix. It's cheap and you get entertained. But these things go in cycles, right? Subscription levels, competition, which studio signs up. There's a lot to this stuff. Wherever there's big money, there's big competition. Always has been and probably always will be. So, Netflix, I'll talk about it in my summary and executive summary. Microsoft, again, an excellent quarter. Yeah, 26.16. It and Amazon just kicked butt. These hyperscalers, MicroStrategy. I mean, it doesn't get any uglier than this. Let's take a look at so 731. So we're only a little more than a year. I don't really have to roll this one back because some of these funds, as we get further, they didn't launch. So it's really but look at this. You all know it. I'm not telling anybody anything new, but these two numbers, 13 and 47. Now, if this was reversed, I want to own that, right? And actually, as much as I would knock on MSTW, it probably is setting up. If we get down to 40,000 on Bitcoin, it's probably attractive. It could get to 150 again. That would be a time to be in it, but I don't think it's yet. But it's cheap, but it doesn't mean that it's going to go up anytime soon. Now, AMD is just the opposite, guys, right? Let's talk, let's pop up that chart. Easy to see. I don't know where I was traveling and I'm just now back home. So I'm not sure. I mean, I probably should just look at the AMD underlying, but you can see here what this thing did, right? From $40 to almost 120. I mean, it's a triple. But anything that goes up like that, I'd have to put the Elliott wave on here. It's only come back. Let's measure just right here. So we call 40 to 112. So it's 73. And how far have we come down? 113. We went 77, call that 78, 22 and 13, 35. On what number did I say here? So I don't know that it's done. We could have another pullback, but it's in this general vicinity, the reasonable retrace. Hard to tell if it's over or not. And the markets have to do with that, right? But when you get this stretch, this is where you take money out. If you were selling anywhere at this top or back here, and you got out at $100, you could have bought back in at 78. You just took $22 out of owning. It doesn't matter if it goes down here. That's how you play these things because you just can't hold and think it's going forever. I'll be all over my Patreons for the next silver and gold. We get up to around 7,500, 7,800 on gold and 160 on silver. I'll be reminding people, take 30, take 40% of your wins off the table. All right, so this is a chip oriented, but Broadcom, the underlying company that renamed itself Avco, um, It owns a lot of software. It has some semis, but its semis are on the communication side of things than just on the pure processing speed. So it's kind of a unique company. It's got a lot of assets. It's not winning, but this isn't a bad loss. This isn't great. I want to see a little green in here more. How's it done in its 1 year? And that's a good number, 28 versus 12. I'll take that any day. And Google was certainly running, but now it's pulling back, right? We could look at the underlying, but I'll just look at, we'll just look at the fund. It's going to mimic it. Yeah, look at this. Boom, right? $55 to $82. And we retraced 80% of that. That's a 0.786 retrace. And look now. Now we could do something like this and get back up to, a lot of this, the markets have to do with it and the tech and the NASDAQ, but very likely, when you look at it this way, this is just, this thing may get back up here and sort of form an inverse head and shoulders. Kind of a cup and handle, but not really. So this is a little more complex pattern. Again, this is a leverage fund. If I really want to do my Elliott wave, I want to do it on GOOG, right? The underlying. But it's worth noting, guys. All right. But a winning fund with another 2844 by 10, a lot like AVGW. Costco, a little less. I know we all love to shop at Costco's. But, it's been an underwhelming fund overall. It doesn't even have a year in place. And look, 961, 962. I mean, that's break even at best. There's nothing to write home about. Uber, almost the same way, had one winning period, two losers. Let's see. 10 and 25. Yeah, these things, think about it. Robotaxi, Google's product, when this stuff all comes, and if the Chinese ship their automated self-driving cars over here, like I see in Asia, this is, the Ubers are dead eventually, right? It's like somebody that it works on spreadsheets. AI will replace your job. Finance, accounting and some of that stuff. Hell, it's going to replace the surgeon's jobs, but he thinks it's a winner to go to medical school. ARM, I like a lot, guys, because the ARM technology is about what the chip does, right? So your Androids, your Apples, a lot of them are running in the mobiles and that kind of stuff. They're running on ARM architecture instead of x86. So it has some unique advantages. Now that's different than just the pure high AI oriented chips, right? That's a different arena in itself. But I like ARM. I like the technology. I mean, it's had some ugly, ugly. Why is this even right? Oh yeah, it's been paying really well. I bought a little bit of this, like $70, and it went to 100. But it's a small. I bought it in my IRA. It was like under 20 shares. I just had a little bit of cash from other dividends in my IRA, and so I bought like 19 shares of ARM. At, so I didn't worry. It's such a small amount. I'm not going to try and get a $20 gain on it, right? But I could have. I mean, this thing has been. Look at this. I bought down here, somewhere in here in the 60s. And then it just rocketed to 99. And now look, my NAV is underwater, but I got a massive amount of payouts. Look at this: 78, 49, $1.29, 99, 264, to that, 215, 133, $2, $1.60. So I'm almost break even though I'm, $20 down for what I paid for it because I've been paid the shit out of this. And look at its IV. So this is one to consider, especially when you get to these levels. Let's look at the underlying let's look at ARM. Yeah, this thing, when you base like this for this long a period and then you ultimately break out, look at this. You could draw a line down here, a slanting resistance line, or, I mean, support line, and look at your resistance. When this thing broke out of here, it ran. Now, this is a healthy retrace. So to me, this is arm itself. So your arm W is going to look similar. But this is a pretty healthy retrace. You might want to orient it around 200. It may get back into this area right here. And you're probably going to have good, strong support. So that's probably mid to high 30s on ARMW. It paid good. So that's how I look at this stuff. I'll talk more about I mean, look at this 27 and 9. That's what you want to see. Now, I've been saying I like BABA. This is based on BABA, right? The Amazon from online purchasing in China, because their valuations, PEs are so much cheaper and there's more people using their product. These things eventually are going to be cash cows. And I think that they're going to do really well. Now, I've said that for a few months and they were still hanging, but look at this recent. So I like where BABW is at. This is all not non-functional. These are what work now. But it's been ugly if you got in early, right? But this is where it was, 53 bucks, and you can now buy it on sale over 50% cheaper, especially if you bought here. I like this range for BABW. And it's not a bad IV, honestly. So that you'll see that on my recommendation list. Now, you guys know I love this fund, and a lot of my patrons are in this. But I'll be honest, it's ugly when it's ugly, right? But all you can do is load back up when you see these kind of prices, right? Because where did we go? We came out at 50 in October. Remember, our metals ran up. We pulled back starting around the 17th or 18th. I thought we were going to do a 40% on the miners. We went down about 25% and then just in the A wave, and then the B bounced up and the C didn't even really happen. It was like a halfway point, and we just ripped all the way up into the end of January. And then we crashed big time. But I didn't know if the October one wasn't going to be bigger, I was going to load up. I didn't really have a chance to load up. But look at this. For all of its period of time, it's still got a $3 advantage, $3.50 advantage, because it pays well. And this will be a huge winner. So anybody that doesn't own this fund, you're stupid if you don't buy this fund. And don't tell me, hey, Bruce, I bought it at 34 and it's 32.90 now. I'm losing money. No, you're not. You're getting paid. And then let me know if it's not 100 in 18 months, because it will be. Now it doesn't mean it might not rip to 140 and pull back to 70, okay? But I'm just saying you got to be in these to win. Look at this, consistent payer, right? But this isn't positive. I mean, but I figure for the most part, this is certainly over with. I don't see much more happening. There's not a whole lot left to go down. Here's the other thing for you guys that know I talk about the miners. Not only do I think when we lift off, now the pre market was looking awesome, by the way, guys. I should be telling you that. But now I'm recording, so, I got to finish this. These miners will gain a greater percentage than they did in this first wave up. So I think the miners are going to outperform the metal maybe by a 2 to a 2.5. They were somewhere around 1.5 to 1.7 in the other cycle, the last cycle. So we should outperform on this next one. I don't know if it means the stock market goes down, but the stock market's not going to surge anywhere near what the miners are going to do. All right, guys. So this is a winner. Gold is flat, right? This fund doesn't have any IV. The underlying is GLD. But, gold has its period. When gold's 7,000 versus 4,000 now, this fund's going to make you money, but it doesn't have the gusto. It doesn't have the alpha from an IV standpoint to make you as much cash. That's why I always say get into the miners, get into GDXW. Now, of this stock, I like United Health. It's certainly, it's a winner 3 periods in a row overall. This was a double win because it's one of the better healthcare companies. And in the US, you're forced to have a healthcare company. So here's a fund that, it's 11. And look at this, it's barely minus here. That's a winner, guys. I know it's only, 7 months. And then this, this is a bond fund. Who cares? Right? It's flat to nothing, right? It's gone from 49 to 41 because interest rates are heading the wrong way for a fund like this to be a winner right now. Now that could change. So I put it on here because it's a fund. I don't want somebody to say, oh, you didn't cover that one, right? And I'm not doing 2X's right now. I'm doing the income funds because that's what I started my YouTube channel. All right, guys, here's where the rubber meets the road. I hope you like what I've done. All right. So I cut out a little bit. So this sums up these funds. And my start price, instead of being what it started with, if somebody says, Bruce, on 7/31, 2025, NVW was not 52.26. You are right. I moved it back to the 52-week payday and said, okay, I'm going to track it for 1 year. Okay, now 4 more calendar days have gone by. Whoopee, right? I'll reset it. This one's 365, right? And then you see these is what they are. I don't have to bring them down. But this was up, 70 weeks worth. So this was in the 400 in terms of days. And then I would drag it down to 365. But that's stupid. Let's just look at things at the 1 year. So when this is, 2 more months, it'll still be tracking 365 days, and so will everything then. So we're really, whoops, see my current price. What happens? The markets move. Okay, now I got it reset when current's not reading correctly. All right, guys, so I won't bore you, but here's what you want to look at. So a 1 week change, whoopee, NVDW, it's green versus red. So which funds are doing the best? The ones that just in 1 week, right? Prior week it was 33.65. So NVIDIA went to 35.27, but this really should be set to Friday. And now it's picking up the day and it's moving to, this is Monday's close. So I'll reset this by the time I post the next one and it'll roll back to the Friday close. I can't do everything at once. I spent a lot of time on this. So anyway, here's your total distros. This is your distro percentage. So how much have you made annualized in NVFW? Look at Tesla. You've made a shit pot, 91.81, pays like a champ, but it's a yield trap, right? So your annualized to 365 days is 90.82, but you lost 47% on your NAV. Hell, on NVDW, you lost 32%, but on Apple, you're up 10%, right? So of these three, this is really your better forward, but this just started to happen. Apple's been moving up recently. So it wins. I color code these for when they're launched. So who's the best fund, right? This was actually showing NVDW the other day. And then all of a sudden, when I updated the prices. So in this next group, Amazon's the winner, right? But there's only one other fund that's green in total return. For those of you that know, you know what total return is. I simply add up the 365-day annualized distribution percentage, paid $30.82, right? On a price that started at 52. Now the price is 35.27. So an annualized loss is minus 32% on NAV erosion. But you got paid 58, so you still have a 26.12% return. That's how you have to look at these funds, guys. There's no other way, right? And now Palantir is red on its 1 year. And coal is really red. Look at this. It lost 86%. of its value on a leveraged fund, but it's paid you 52. And Palantir was positive for the most part, but as it's approaching that bottom, it's gone down 64% and only paid 46.82. So it's negative 17. So Amazon, BRKW, look at who now. You haven't seen, you know, who negative in a while, but it's because it's 65% down and only distributed 63% over the last 12 months. Now it's ripped at times, but it's the old saying, you got to trade these things. MSTW doesn't get much worse than that, right? Now look at AMD. Even though it's gotten the shit kicked out of it recently, it's still got a tremendous 12-month total return. This thing was 180 not long ago. So if you timed getting in, I didn't. I thought the semis were going to go down, and instead they ripped. I knew what memory was doing, but I didn't catch that one. Some I do. Avco's still a winner. Google's still a winner. That's fantastic. Two greens. Anytime you see two greens, you got to love it. Now, you wait till I get to the stuff that matters. ARM still got an awesome 44%, even though it lost 25 because it pays really well. And Babo is minus 32. I like where it is. We'll get into my summaries here in a minute. GDXW still positive, right? 1247 return, even though that's ugly, guys. So buy the dips like a lot of you have, right? GLW barely positive. Gold's boring itself. UNH, right? I told you it's a winner, and it is. All right. And who cares about this, guys? You're losing your money. All right. So let's take a look at the new things I've added for you guys. To me, these are awesome. So here's your 6-month performance, right? Or sorry, 6-week. So you want to look for winners, right? This means during this 6-week period, it's positive, right? But let me show you the other things to look at here. Doesn't quite all, oh, it will fit. Nope, it won't. I'll scroll down. So let me explain these. So I took the last 12 weekly distributions, called distros for short, and then I mapped them from oldest to newest, right? And then so you can see that NVIDIA, this was a low distribution. These are weeklies, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, right? There's 12 weekly distributions represented by this spark line. What is this? This is the last 10 trading days percentage by the gain on the underlying or on NVDW. So 10 days ago, right? This white arrow up indicates that it jumped up from the previous day. Then the next day jumped up, then it went up higher, then it receded, then it receded, then it went down a good amount, then it bounced a little bit, then it went down a lot, and then it's climbed up on the last 2 trading days. This is key, 52-week mark, high to low range. So think of it as the far left is like no gain, and this is massive gain, right? And so where is it set on its high to low range? Well, it sets very much in the low. The midpoint would be right in the middle. So look at Tesla. So if you're going to buy Tesla, you're buying it on sale. And look at it, it's been beaten the crap out of. And then what do I have here? 6-week change by week. This is 10 days of change. This is a high low. This is the 12 weekly payouts, right? Did the payout go up or did the payout go down? And then these are red and green. I took the last 7 weeks and said, okay, I have a baseline. And then 6 weeks ago, it went down from that baseline. Then it jumped up a little bit. Then the next week it jumped up a lot. Then it jumped down a lot. Then it got back slightly above the baseline. And then the last distribution was down, or sorry, the NAV. So this is 6 weeks change value of NVDW each week, right? And there's a few more I'm going to add on here, but this is time consuming, guys. These all map to the raw data over here. I got a whole bunch of data. So this is a lot to look at. It all doesn't fit on the screen. Maybe if I shrunk it. Okay. So when I look at something like UNHW, which I talk about, it's probably the highest point of any of the 23 funds of Roundhill. So it's trading at a higher range, okay, but it's still, its distribution. So I color coded these green, red, and white by the background. If I just remove the background here and I make this white, then you just have, it doesn't change your spark line. These are the weekly distributions. But then I choose to color code it because it's trending up over the last, right? This is trending down. This is trending up. This is trending sideways. This is going down. This is going down. This is trending up. This is going down with a little up. This is going down. This one is mixed because it's going down, but it has a few bounces, right? This one's kind of went up, but now it's trading down the last 3 times. This one's down recently, but up. So I make them white. They're neutral, right? So you got red. So altogether, I have funds. 6 of them are green. These are on the distribution. 11 are red and 6 are white. So neutral to green is 12 and red is negative. So this doesn't get it all done for you guys, but this is powerful data when you do analysis. And then here's something else, and I'm going to build this out some more. Some of you guys are going to recognize this, some of you aren't. So let's take a highly volatile pair, right? It's been a good pair, but it's been the shit kicked out of it. It's 52-week total return after getting all the distributions. It's negative 65. It doesn't get much worse than that. I don't know any fund on an income fund unless you go to Yield Loser. They got some. Go look at their Misty. I imagine it's worse. So look at its 52-week high to low range. This, when it does turn, and it will, October, December, I'm not sure. It's probably coming. And again, I'm not as much of a crypto guy as I am precious metals and commodities, but I do think it has an opportunity. Then buying this thing dirt cheap, right at a $3.20 NAV price when it was 50 before. But understand, you're losing 86% on $3. I don't think it's going to happen. But it doesn't pay you much on a $3 fund. But it's something to be watched, but it's also in the past to be avoided because look at its distro. How can it pay a whole lot now? Now, what are stable income anchors? Even Palantir, with its big drawdown, still had a positive 1247, and now the earnings turned up. I think this has a look at where it's at on its 52-week basis on highs to lows. This thing will run. I don't know if it's tomorrow. I don't know if you buy today, but I think you bought a winner here if you buy some. I've held what I've owned. I've taken some profits out and bought back in, but I'm holding PLTW. I don't own any BRKW, but my God, for a market, it doesn't pay a huge amount, but it doesn't crash. I don't think it's been much lower than this. And yet it's still positive. It's like the safety play, right? And then I just put this again as total return warning, right? That's warning you, watch out. But what is negative also can turn positive, guys. This is the 6-week price change, right? So we're kind of trending flat, a little bit of down, a little bit of up, but from $3, where is it going? It was 322 and went to 320. This thing will turn at some point. Where is it when it turns? When it bottoms? I don't know. Does it go to 250? Does it go to 280? But I'll tell you what, it's a buy at some point. So over here, momentum trap. How many people chased AMDW when it was making those $2 payments? How many of you chased RMW at 99? I mean, I at least bought it at high 60s and rode it to 99 and rode it back to 40. But I was enjoying the pen. I own 19 shares. I just used some distribution cash I had and said, oh, I'm going to buy RMW because I like the technology, but it's a multi-year hold for me. And I think AMD is a great company also. I only buy AMD equipment. I don't buy Intel on my mini PCs and my PCs and laptops. I know a lot of you are probably Apple users, but that's fine. You're buying RMW then because Apple's supplying the processors. So GDXW, value, the coil spring. You want things that are in this area. I mean, Babo's moved up a little, but I think Babo's got, BABW over time will pay. And this little 2-week nav, look at this. So this one is moved up, one payment, two payments, down but kind of flat, down a little more, bigger payment recently. We thought we were coming out. Now this next week will probably be a big jump based on just what it's doing in the pre-market. Look at this. Looks pretty darn good. 59.79, 77.54. Look at this. I got 1,100 shares in my AGQ, all at low values. 35, 38, 68, 72. My average price is way down there. I see this thing back to 400 again. So just a little bit of what's going on there, guys. So Netflix, again, I was talking, look at it, it's kind of trending up in the price. It's 1 week down. It's at a buy point to me. Right? This has been your 52-week distro. You're going to get paid more on GDXW and then Netflix and then this. And this is at least held a positive. These are negative, but that also means they're on sale. So, guys, I plan to add some more on the executive summary. I just ran out of time. So, I hope you enjoyed this. It's going out on YouTube, free for everybody. I'll post it on Patreon so the free members and everybody can see it that aren't watching my YouTube. And thanks, Greyhawk, Bob, for bringing it up. I needed to get this done, and I didn't want to do the same old, same old. I wanted to add more value, okay? Because that's what I like to do when I can. And sorry about not posting for a while. I had some medical. I had to do my first MRI I've ever done and CT scan. And I got to tell you, it's not fun. I did not like that MRI. Both contrast and non-contrast and the injection and the time in the machine. Didn't like that at all because it's a full body one. All right, guys, have a great one. I'm back in the saddle. You'll see a lot more coming from me. Have a great Tuesday ahead. Bye for now.